There are 5 stocks setting up right now that I believe are positioned for a serious move heading into June 2026, and every single one of them is sitting on top of a narrative the market has not fully priced in yet. Stock number 5 sits at the absolute center of the US-China rare earth standoff that Trump and Xi just met to negotiate. Stock number 4 just locked in massive multi-year commitments from Meta, OpenAI, Anthropic, Microsoft, and Nvidia itself. Stock number 3 is one of the most explosive setups in its entire sector right now. Stock number 2 is trading at deeply discounted prices while quietly executing the exact same pivot that turned other companies into 10-baggers. And stock number 1 is a quiet, overlooked beneficiary of not one, but 2 of the biggest stories in the market, the data center power crunch and the SpaceX IPO coming in June. I'm going to lay out the case for each one, walk you through the real risks, honestly, and let you be the judge. Stay with me, because some of these windows are closing. A quick note before we get into it. Nothing in this video is financial advice. I am not your financial advisor. I am an investor sharing my own research and reasoning. Several of these names are speculative, narrative-driven positions, and I will be upfront about the risks on each one. Do your own due diligence, understand your own risk tolerance, and make the decisions that fit your situation. As I always say, if you are the one taking the ultimate risk, you have to be the one doing the ultimate research. With that out of the way, let us get into it. Before I give you the names, I want to frame how I am thinking about this entire list, because it matters for every single one of these stocks. Markets move on narratives first, and fundamentals second. That is not a cynical observation. It is just how capital actually flows. In the short to medium term, the story a stock tells. The reason institutional money decides this is the sector that matters right now moves the price far more than any single quarterly earnings number. The fundamentals matter enormously over the long run, but the biggest, fastest gains tend to get captured by the investors who identify a powerful narrative early, while it is still building before the crowd has fully arrived. Every name on this list is sitting in front of a narrative that I believe is genuinely underpriced right now. Some of them also have real fundamentals underneath. Some are almost pure story. I will tell you which is which as we go. Let us start at number 5. Number 5 is USA Rare Earth, ticker USAR. And this one sits at the dead center of the single most important geopolitical conversation happening in the market right now. Here is the setup. Rare earth elements are the metals used to make the powerful magnets inside virtually every modern military and high-tech product. F-35 fighter jets, missile guidance systems, electric vehicle motors, wind turbines, satellites, MRI machines. All of them need these specific materials. And here's the problem. China controls roughly 70% of the world's rare earth mining and around 90% of the processing. So even if America wanted to build its own missiles and EVs without Chinese components, right now it simply cannot. That is not a trade inconvenience. The Pentagon, Congress, and the White House have all openly called it a national security crisis. USA Rare Earth owns a deposit in West Texas called Round Top, essentially a giant domestic supply of these metals sitting in American soil. They are also building a magnet factory in Oklahoma to turn those raw materials into finished magnets domestically, so nothing has to be shipped to China for processing. And the U.S. government is not just cheering from the sidelines. They are deeply financially involved. In fact, when you look at how many ways the U.S. government is tied into this single company, it becomes very hard to think of this as an ordinary, small-cap mining stock. The government owns roughly 10% of the company through 16.1 million shares, plus an additional 17.6 million warrants. There is $277 million in cash grants via the CHIPS Act. There is a $1.3 billion senior secured loan, also through the CHIPS Act. And there is a Department of Energy partnership working with national labs on rare earth separation technology at the company's Colorado and Texas sites. Added up, and Uncle Sam is simultaneously a shareholder, a lender, and a research partner, all part of a broader $18.6 billion critical minerals push. The catalysts that could move this stock in the coming weeks are everywhere. China tightening exports further, a new Pentagon or DOE funding announcement, a defense contractor like Lockheed or RTX signing a supply deal, a Trump executive order on critical minerals, or frankly, any U.S.-China trade headline at all. The honest risk is that mining projects almost always take longer than companies promise, and they will likely need to raise more capital by issuing shares, which can pressure the stock. But the combination of government backing and geopolitical narrative here is genuinely rare. Number 4 is CoreWeave, ticker CRWV. This one is still down meaningfully from its highs, and I think June is setting up to be a strong month for it. So what is CoreWeave? They are the leader in what is called the neocloud space. A neocloud is a new kind of cloud company built from scratch for one single job, running AI. The old clouds like AWS, Azure, and Google Cloud were built to run general business software, email, websites, databases. CoreWeave is different. They buy tens of thousands of NVIDIA chips, stack them in massive data centers, and rent that computing power out by the hour to the biggest AI companies in the world. Think of it like renting a U-Haul instead of buying a moving truck. OpenAI, Anthropic, and Meta rent CoreWeave's power to train and run their models. And the customer pipeline right now is genuinely staggering. Meta has committed $35 billion to CoreWeave through 2032. Jane Street, one of the sharpest trading firms on Wall Street, just signed a $6 billion deal and put $1 billion of their own money into the shares. NVIDIA itself invested $2 billion and agreed to buy any unused capacity through 2032, meaning the most important chip maker on Earth is effectively backstopping CoreWeave's business. Anthropic signed a multi-year deal. OpenAI is a major customer. All told, CoreWeave is sitting on more than $66 billion in deals already signed and waiting to flow in as revenue over the coming years. And here's the tailwind that just got dramatically stronger. NVIDIA just reported earnings, and it was a blowout. Record revenue of $81.6 billion, up 85% from a year ago, with data center revenue alone hitting $75.2 billion, up 92%. Jensen Huang described the AI build-out as the largest infrastructure expansion in human history. When NVIDIA prints numbers like that, it is direct confirmation that the AI total expenditure wave CoreWeave depends on is not slowing down. It is accelerating. Every dollar of that data center spending flows downstream toward companies like CoreWeave. The honest risk is real concentration. A large chunk of revenue comes from just a few customers, and they have borrowed heavily to build out their data centers. If the AI cycle ever turns down, CoreWeave gets hit hard. But as long as the build-out continues at this pace, the setup is compelling. Number 3 is Nebius Group, ticker NBIS. And I want to be honest about something right away. This one makes me slightly uncomfortable to put on the list because it is not down from its highs. It is sitting at all-time highs. I would genuinely prefer to buy a dip here, but the June tailwinds are too significant to leave it off. At its core, Nebius runs the same primary business as CoreWeave, renting out AI computing power to major companies. Same playbook, same NVIDIA partnership, in some cases the same customers. But here is the twist that makes Nebius different. It is not only an AI cloud company. When you buy the stock, you get 3 other businesses bundled in. There is a self-driving car and robotics company. Think of a standalone Waymo-style business. In a moment when self-driving momentum is heating up across the whole sector, there is Toloka, which manages the human quality checking that makes AI files smoother. And there is Triple 10, an online tech education school. That last one I am not particularly excited about, but it belongs in the research. And here is what genuinely separates Nebius from every other neocloud name in the market right now. CoreWeave has exactly one story driving it. AI infrastructure. Nebius has 4. 1, AI infrastructure. 2, self-driving cars. 3, AI training data. And 4, the one almost nobody is talking about, European AI sovereignty. Europe increasingly wants its own AI infrastructure, not dependent on American or Chinese companies. And Nebius operates European data centers that CoreWeave simply cannot offer. The CEO, Arkady Volozh, is the founder of Yandex, often called Russia's Google, who has now restructured and relaunched out of Amsterdam with all of that operating experience behind him. The risk is that the corporate structure is more complex than a typical American company because of the Yandex split, and like CoreWeave, there is customer concentration, but 4 narratives in one stock is very hard to ignore. Number 2 is Mara Holdings, ticker MARA. And this is the deep value contrarian play on the entire list. Mara has spent years and billions of dollars building out one of the largest and most powerful infrastructure footprints in the world for Bitcoin mining. Right now, Bitcoin is in a bear market, so anything crypto related is beaten down, and the market hates this stock for exactly that reason. But here's what the market is completely missing. The core of what Mara is doing right now is pivoting aggressively into the far more lucrative data center space, and Bitcoin mining and AI computing require almost identical infrastructure. Both need enormous amounts of electricity, gigawatts of power, huge plots of land, direct grid connections, advanced cooling systems, and fiber internet. Mara already built all of that to mine Bitcoin. Now they are repurposing it to run AI workloads. In February 2026, Mara announced a major deal with Starwood Digital Ventures to build out 1 gigawatt of AI computing capacity, scaling toward 2.5 gigawatts over time. For perspective, CoreWeave is targeting roughly 5 gigawatts by 2030, so Mara is aiming for half of CoreWeave's capacity. The stock jumped 17% on the announcement day. But here's the bigger picture. In their most recent earnings, the company said up to 90% of their mining capacity could be converted to AI workloads. And here is the precedent that makes this pivot so interesting, because we have watched this exact playbook work before. This is the same strategy Applied Digital ran, the move that took that stock from the low single digits to over $45 within about a year. Mara is now effectively a hybrid Bitcoin and AI infrastructure company, but Wall Street is still valuing it purely on Bitcoin's price, which is the old way of thinking about it. The market has so thoroughly given up on crypto that it is pricing Mara at near despair levels, completely ignoring the enormously valuable AI infrastructure pivot underneath. The catalysts to watch are a major AI customer announcement under the Starwood deal, more site conversions from Bitcoin to AI, Bitcoin price strength returning, crypto-friendly legislation, and other miners announcing AI deals that could trigger a sympathy move. The risk is obvious. If Bitcoin stays depressed and the AI conversion stall, this stays cheap for a reason, but the asymmetry is genuinely attractive. And number 1 is NuScale Power, ticker SMR. This is the name I find most compelling on the entire list because it sits at the intersection of 3 enormous narratives at the same time. Let me explain it simply. Nuclear power plants, built the way we have built them for 60 years, are massive. They take 10 to 15 years to construct, cost upwards of $20 billion, and require giant custom-engineered sites. That is why America has barely built any new nuclear in decades. NuScale is flipping that entire model. Instead of one giant custom plant, they build small reactor modules in a factory, ship them by truck or train, and assemble them on site. Each module produces 77 megawatts, and you can stack them, 4, 6, 12 modules, to build a full plant up to 924 megawatts. And here's the critical detail. NuScale is the only company in the United States that has received approval from the Nuclear Regulatory Commission for its reactor design. Every competitor, Oklo, X-Energy, Kairos, BWXT, TerraPower, is still working through the approval process. NuScale already finished it. That certification took them over a decade and tens of millions of dollars to secure. They have it. Nobody else does. That is a genuine first mover moat that cannot be quickly replicated. Now here is why I think the reversal could come soon and where the SpaceX connection comes in that almost nobody is discussing. Every AI company on Earth needs more electricity, and they need it fast. Microsoft is restarting 3 Mile Island. Amazon is buying gigawatts of nuclear power from X Energy. Meta locked up 2.6 gigawatts from Vistra. Google is signing nuclear deals with Kairos. Why is everyone going nuclear? Because nothing else works at scale. Natural gas takes 4 to 7 years and faces permitting problems. Solar and wind do not work at night, and AI data centers cannot go offline at night. Coal is politically dead. Old school nuclear takes 15 years. Small modular reactors are the only way to get clean. Always on power fast enough to feed the AI build out, and NuScale is the only public company with an approved design ready to go. Then layer on the space angle. Elon Musk has repeatedly said Mars colonization will require nuclear power, and every level of SpaceX's future missions will need dramatically more energy. NASA is funding small reactor designs for the Moon and Mars through its Fission Surface Power program. DARPA is funding nuclear systems for deep space. As the SpaceX IPO plays out in June and investors start tracing the downstream effects of all that capital, the nuclear for space narrative becomes another tailwind. The honest reality is that NuScale's first commercial reactor will not be online until around 2029 or 2030. So this is very much a story and narrative play, not a near-term fundamentals play. But the same is true of SpaceX valuation and much of Tesla's. If you only ever value story potential at zero, your only buys are Walmart and See's Candy. If you understand how narratives drive returns, SMR story looks genuinely underpriced right now. Let me bring this together, because there is a clear thread running through all 5 of these names. Every single one sits in front of a narrative the market has not fully absorbed yet. USA Rare Earth and the U.S.-China critical mineral standoff with the federal government as a shareholder. CoreWeave and the AI infrastructure build-out that NVIDIA just confirmed is accelerating, not slowing. Nebius and its 4 separate stories stacked into one stock. Mara and the contrarian Bitcoin to AI pivot that the market is pricing at despair levels. And NuScale sitting at the crossroads of the nuclear comeback, the AI power crunch, and the space economy, with a regulatory moat no competitor can match. These are not low-risk positions. Several are speculative, narrative-driven, and dependent on stories that have not fully played out yet. The fundamentals on some of them are years away. I have tried to be honest about that on each one, but the investors who build real wealth in these moments are the ones who recognize a powerful narrative early, size their positions intelligently for the risk involved, and do their own homework before committing a single dollar. June is shaping up to be an enormous month for several of these themes at once. The question is whether you are positioned ahead of it or watching from the sidelines when it moves. If you want to keep getting honest, narrative-aware breakdowns like this on the setups most channels will not touch, hit that subscribe button right now and turn on notifications so you do not miss a single video. And speaking of what is coming, with the SpaceX IPO now just weeks away, there is one specific name I've been digging into that I believe is the single most overlooked way to play it. That deep dive is coming in the next video. Subscribe, and I will see you there.